Up now, Forum Daily's weekly crypto and digital asset update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly crypto and digital asset update. I'm Catherine Murray. Well, we are seeing cryptocurrencies trade relatively mixed today, but we did see a dip following the very strong U.S. jobs report out earlier this morning, leading investors to believe that perhaps the economy is strong enough that the U.S. Federal Reserve will continue to raise rates in the December time period versus taking a pause, which was suggested this week by Fed Jerome Powell, which is why we saw a nice rally in the equity markets. And recall, of course, that we've seen a tight correlation between cryptocurrencies and the equity markets for the past year or so. They're quite tightly correlated versus when we originally saw cryptocurrencies come into the market. Now, away from that, of course, we're keeping our eyes on FTX and the fallout there. Sam Bankman-Fried, the founder of FTX, has, in fact, conducted two high-profile interviews this week, one with the New York Times Deal Book Summit, where he said he was shocked about what happened and had no intention to commit any type of fraud. Having said that, we know that the valuation of FTX went from $32 billion down to about zero. We've also heard from billionaire cryptocurrency CEO of Galaxy, which is Mike Novogratz. He, of course, did start his career in the traditional markets on Wall Street. He's actually been quite vocal this week, saying that Sam Bankman-Fried should, in fact, go to jail and that he and his colleagues committed fraud. So you are starting to hear more voices speak out about what has happened. Away from that, you might be wondering, where are the regulators in all of this? Of course, there's been a call prior to FTX's collapse for more regulation or for regulation in the space. We did hear from the head of the CFTC in front of Congress asking for more regulatory authority, for more broader authority to oversee the spot cash market exchanges, which aren't regulated right now by any federal agency. So he is in front of Congress, congressional hearings, asking for broader authority to, again, try to make sure that this never happens again. Now, away from that, we are also, of course, continuing to watch the fallout on BlockFi, which is a crypto lender. They are in bankruptcy proceedings this week, and we have learned through those proceedings that FTX and Alameda, that's the risky hedge fund that FTX owned, and that Sam Bankman-Fried actually started prior to starting the FTX exchange, that those two entities owe BlockFi just over $1 billion. But again, there are so many creditors that are owed money on the back of this fallout, and many investors as well. Interestingly as well, a little bit of news here as it relates to Apple. They have disabled a version of Coinbase's wallet that would allow users to be able to send NFTs to each other. And that apparently is because Apple wants to take a 30% cut from the gas fee transactions. According to Coinbase, it wouldn't even be possible to pay that 30% because the Apple system is not set up to receive it. So a little bit of controversy going on right there in terms of wanting a cut but not being able to pay it, even if Coinbase wanted to. Away from that, we're also watching the global development within the crypto and blockchain space. It absolutely does continue despite the FTX fallout. And India, for one, is launching its first retail digital rupee pilot program involving 4 banks in 4 various cities. The CBDC, which is something we've talked a bit in the past, which is a central bank digital currency, is to be issued as a digital token with the same denominations as physical cash by the various banks or by the central bank, which is quite interesting. Why are they doing this? What's the motivation? Apparently, it is to decrease the cost of distributing physical cash, and also for financial inclusion. Again, despite the fact that we are seeing the FTX collapse and a number of firms taken under with it, there is absolutely the continued movement forward as it relates to tokenization, digital assets, and blockchain. And on that note as well, BlackRock's CEO, Larry Fink, said that the next generation of markets will be the tokenization of securities. So blockchain tokenization refers to the process where a digital asset, where an asset gets a digital representation on a blockchain in order to authenticate it, the owners, the transactions, and the historical ownership. Nima, I'll leave it there. Never a dull moment. Back to you.
All right, thanks for that, Catherine. You can catch Catherine Murray on the Buck Stops Here, which airs every Sunday morning at 9 a.m. Eastern. Stay with us, Forum Daily. We'll be right back after a short break. Stay tuned.